What up, what up, what up, what up, what up, what up, traders? Welcome back to another major market breakdown. This week's gonna be this week and a few weeks, in the future are gonna be a little bit different than the usual. Not really on the analysis side, more so on the execution side for myself. I'm just letting you guys know, just to be transparent. I am decoupling a little bit from the U.S. dollar. I don't personally really want to trade it that much, just because news and volatility. I like to trade fundamentals, but I like to trade stable fundamentals. When fundamentals start getting super extra volatile, then of course it's going to chart add more liquidity and volatility into the market and just make things a little bit more risky. And it's just easier for my strategy to just you know take it where it's light. So I'm gonna get into some of the crosses that that I'll be personally trading and some of my members are trading, but we are gonna go ahead and do the full major market breakdown. You'll still get my outlook and perspective, and hopefully this crazy volatility and news cycle doesn't cause me to be wrong. But that's and with knowing that that's more possible. That's why the main reason why I'm decoupling just a little bit for right now. We'll probably be trading more of these majors back in July, after July 4th, when we summer trading really gets underway. We'll talk about that a little more later on in this episode. Let's get into it without too much chatter for you. But before we do get into it, hit that like button, hit that sub button, and that bell icon. All that's going to tell the algorithm that this is valuable content and it needs to get pushed out. So don't be a gatekeeper, all right? Like, send this to the homies so they can trade well too. Now, for the U.S. dollar, I can see this going to either test this out or break this high before we get more downward momentum on the dollar. Now, we are going to see some heavy downward momentum on the dollar coming pretty soon, just based on a lot of I'll say majorly in part due to how a lot of the world is dumping U.S. bonds, dumping the U.S. dollar, basically like saying we're getting rid of the dollar. So in like all this tariff stuff is dying down, cool, but the rest of the world isn't done like getting rid of the dollar. Now, granted, the dollar is going to be around. It's still going to be important. It's still going to be a major part of world trade for a very long time to come, at least the next 10-15 years for sure. But the thing is, how important it is, as that importance weighs downward, so is the value of the dollar. So it's not going to instantly drop to zero, but it's definitely going to start getting more and more devalued here. So, but as far as price action goes, I want to see either this top get touched or broken before I look for sells. Inversely, buys on EUR, USD, GP, USD, things like that. Now, granted, I said I'm not trading those personally, but we're analyzing it as if I still were. So I'll be looking for these lows to get broken within the next month or so. Within the next month to 2 months. It could happen sooner than that, but I don't think it'll just be like a crazy steep drop. We'll probably hit that, bounce along here, and then break this low once we actually get into it might only take a month. I'm not thinking about it. It could. Generally, I'd actually like to see it go ahead and break this low before July gets underway. I'd like to see this get wiped during June. I don't think by the end of May we'll see it get broken. We are sitting at May 17th right now at this date of recording this. And we are going to start doing our major market breakdowns on Saturday, so you can expect to get the videos out on Saturday. I figure, like, dropping in on Sunday, you get less time to really be prepared. So I need the YouTube algorithm to get this to y'all way before the market opens, so you can really benefit from it. And on Sundays, we're kind of keeping Sundays for our live sessions for our private members. So try to just make it so we're not doing too much at one time, so we can get you these setups and then focus on them on Sunday. Now, without too much extra fluff, let's go into Euro USD. I'm only gonna do one or two majors. This right here, I believe I sent this out to some members last week, right after I shot last week's video. I'm fairly sure, if I'm not mistaken, right after I shot last week's video, because of the fact that like once last weekend happened and trade deals started becoming a real tangible thing with China and we start actually having those talks and taking the tariffs down and whatnot, lets me believe that the euro is gonna the euro dollar is gonna at least price down some more, and we can see that from the chart that we just had up on the dollar. We're seeing one more push towards that that last high, and that'll probably push the this euro trade down into these levels, if not touching this 09500 level right here that we have, and that's just really previous support. Now right here she bounced off of she used previous resistance as support. I don't usually like to use those words that much because it's more really supply and demand, but you can kind of interchange those words just based on the market conditions and the chart that you're looking at. But definitely seeing more push down on the euro against the dollar, at least this week. Now when it comes to that's basically the same setup that would be searched for on AU and GU. So you kind of have that right there, just looking at EU. Now granted, they don't always move so great together, just because there's certain inter-societal things in different places that might be affecting currencies and whatnot, which is why we're actually looking to stay in buys on EUR AUD, even though I see the EUR dropping just a little bit against the dollar, as if the ECB stays stays more geez, I'm trying to get the word off, more hawkish, then we'll see this start to rise even more. Now the AU is sort of in tandem with our commodities like oil and gold. So when you're seeing gold, like right now, I'm going to pull up the chart in a second. It's going to kind of make a little more sense. If we're seeing overall sells in gold, then we should probably reason out that there might be sells in AU. Now granted, one of my traders did bring it to my attention that since January 1st, AU and gold haven't been moving as correlated as they have in the past. So these times may be a little different and wonky for that, but generally, I still stick to the consensus that for the most part, AU and gold are gonna move together. So let me go ahead and pull up gold, give y'all a little look at it. That trade hit TP fast, didn't it? Let's get rid of that. That was one of the trades sent out to the private members. We actually we traded a lot less from the sending out public trades this week, just because things were a little bit more on the riskier side, and it's just best practices to send the slightly riskier trades only to the core members, and keep everything super extra, less risky, more bulletproof when it comes to sending out all this stuff for free, just because I know people out there are gonna over leverage off of my word every now and then, and I'd rather, if they have the opportunity to over leverage, I'd rather it be on a less risky trade, so that's just kind of a control that we have here. So gold has the opportunity to dump from here, or it has the opportunity to fly from here. We're in a very give or take zone for gold. So we have this double bottom here, and I love when gold does double bottoms. It usually buys off of double bottoms. But with all the tensions kind of dying down, tariffs dying down, that the Pakistan-India war only lasted but like 20-some hours. It wasn't even that long. Everything is calmed down, at least to an extent at this point. And all the news about the next market crash hasn't hit the markets yet. So I don't know if gold's gonna price in what my team has already kind of priced into our minds, as far as we're seeing a pretty decent overall market correction coming in, based on factors from the same exact factors that caused the 2008 crisis are going to cause the same exact crisis on a bigger scale, most likely before 2035. But the market's not pricing that in at the moment. I don't believe it's pricing that in at the moment. So I think that we'll see some more correction on gold. And if we close strongly up under here, then the target is going to be that 3050 level. And then we close below that, then we'll start looking to take out these zones down here that just got left alone. Because if you go on the 4 hour issue, just go on the daily, you just see it's like gold looks great, gold looks amazing, but gold is absolutely due for a correction. As you can see, it's been rising so much, but at the same time it's getting slightly weaker against the rest of the market, and that's due to things like risk off assets like Bitcoin and the altcoins and things like that. People are finding other ways to diversify and safeguard their money outside of gold, right? And we're seeing a whole bunch of news drop about a whole bunch of big banks are adopting more Bitcoin, bringing in more Bitcoin, doing more Bitcoin transactions and business, and all of those little factors are going to play into the overall significant value of gold. So that's why I think gold is definitely in the overvalued territory still right now, and I think before long we'll see this level here get touched. And I think it'll happen to be because of a bunch of nice, sweet peace talks and things going good in the world. As long as, if we have a positive, like if Trump is positive, and by positive I mean like continuing to make moves that are gonna put the U.S. in a better position and help the U.S.'s credit to the rest of the world, so like the rest of the world trust us. Then we'll see this here play out just like we have it marked here. We'll see this zone get taken likely within the next few months or so, if not sooner than that. But first we'll need to get a closure up under this 3150 ish area. That's gonna really let us know that this is going into a short bearish trend, bearish correction, in order to because gold can fly. You know what I mean? Gold can fly, but it only fly from here if things stay bad. You know what I mean? So if things start looking better for everybody in all angles, then gold's gonna go down, because people are gonna feel better about the markets. They're gonna start putting their money back in stocks. They're gonna start putting their money in all other places except gold. Not all other places, but a whole bunch of places outside of gold, because gold is where you go when things are risky and you want to make sure that your money is safe. You know what I mean? So when investors start getting more greedy, less fearful, we're gonna see this start dipping down. Now, let's we talked about one of the crosses that I'm trading. I'll pull up EURGBP, because this is also going to be looking sort of more bullish in the next couple of weeks, I believe. I think this breakout of this swing high right here definitely lets us know that we're in a shifting market. Right, so if this area here, let me get a something to mark it with real quick. If this area here holds up, then I'll see price turn around and go back towards this swing high and beyond. Now, EUR GBP, I'm seeing a lot of bullishness. If the central bank signals any more hawkish stance compared to the Bank of England, then we'll see this play out exactly how we want to. Now if that changes fundamentally, then we could see something different. But this is what we're seeing. I like to trade crosses super fundamentally. Like I trade them from technical chart standpoint. But when it comes to like the majors, I really get into the chart stuff. But when it comes to the crosses, like I'm way more fundamentally driven. Just because like I'm not exactly sure. It's just an affinity. It's honestly just an affinity for me to. And the charts are less clean. I'll say that. I'll say that's most likely one of the biggest reasons is the charts for crosses are less clean, but the trades are really clean. So it's like you just gotta figure your way into them. Get your right entry points and be cool. See, like this right here, like if I were to get in here and then this area were to fail and it comes back down to these, I'm gonna exit, wait for this low to get broken, and then get back in. That's how I would handle that if it were, if I were to get in and then the fundamentals were to change or something like that. All right. That before we get out of here, I do want to give y'all a little bitty sneak peek real quick, just a little peek at the sauce. We did just launch the bird's eye view tool, and that basically is a sentiment and analysis tool. It's gonna help retail traders be a little bit better at retail trading. Oops, man, I got all these dang screens up. I gotta go find the sauce so I can show y'all the sauce real quick. Right there it is. Share this tab instead. There we go. It's actually an outdated version. Hold on. There we go. We did some updates over the past week so we could see it. Y'all actually got to see the old version and then switched to the new version because I didn't refresh this tab, which is pretty cool. Okay, I was about to say the chart's not loading. We have the chart. You can check the chart out real quick when you're getting some analysis. Right now, since the market's closed, it's not gonna tell us anything. It's just gonna say that there's neutral momentum. That's because the market's closed at the moment. But when the market does open and we start seeing different levels play out, you'll either see slight incoming bullishness, slight incoming bearishness, or incoming bearishness or incoming bullishness. Now, if there's slight in front of it, that means you should probably wait a little bit longer to take the trade. You should probably, do your charting and everything. And if it says incoming bullishness, it's probably about to take off on your ass. All right. So it's free to use. It's gonna be in the link in the description down below. Y'all don't have to pay nothing to use this. You can go here. This little button right here will take you into our free Telegram channel where we post a whole bunch of trade updates. So it's all access right here to basically, if I was like looking and staring at the charts like all day every day, like this is what it is. This is the tool that kind of serves that purpose until we get all of these bots running and sold and deployed out to everybody and whatnot. We are still working on our bot algorithms. I'm not personally super experienced in deploying bots like that. So I'm bringing in some people that are, but I've personally built the algorithms, but I haven't deployed the bots. You know what I'm saying? And so there's different services and platforms and things that go into it and whatnot. And we might have to rebuild the whole bot on a whole different service or platform or something like that. But I'm not 100% sure about that. We're gonna get with the team and dive into that so we can get that out to you within the next 3 to 6-ish months, hopefully sooner than that, because we've been spending the past 6 months backtesting the bot to make sure it's legit, it's thorough, and it's not gonna blow anybody's account. All right. So all of that to say, I love y'all. Make sure you're kind to somebody today, and I'm gonna catch y'all on the next one. All right.